To get started, let's talk a bit about your Bitcoin journey. You've initially viewed Bitcoin, as I understand, as digital gold, and then sort of evolved your perspective to seeing it as pristine collateral. And now you view it as the reserve asset of the internet economy. Can you walk us through how your perspective has evolved over time and what Bitcoin as the internet's reserve asset actually looks like in practice?
Yeah, absolutely. And it's a great question. And I think it's a natural progression that all Bitcoiners go through, right? You start out and you buy it and you think you're going to be a genius trader and you're going to make quick money and you're going to take advantage of all the volatility. And then you learn that somehow this multi-billion-dollar market, when you click sell, it goes up, and when you click buy, it goes down. I don't know how that works, but it just happens to work that way for everybody. Um, but yeah, so, I got into it in the early days. I learned about it from Jeff Berwick, calls himself the dollar vigilante. I went to school for accounting and finance, didn't really have a passion for it. So when I learned about Bitcoin, I was like, oh, this is interesting. This is different than what I paid to learn. So it kind of piqued my interest. And then I would say it was probably late 2013, like November-ish 2013, when I started buying my first Bitcoins. But of course, I didn't buy them with the mindset I have today. I wish I wish I did. Back then, it was just a very small portion of the portfolio, and I watched it go all the way up to over $1,000 and then come all the way back down. And then I said, okay, I got to figure out what the heck this thing is. I don't know why it's going up and down. Why is it so volatile? And I took a deep dive, and I'd like to say it this way. I went to the bottom of the rabbit hole, planted some dynamite, and went deeper. And that's what got me into Bitcoin mining. So once I got into Bitcoin mining, that's when my real understanding of the protocol and the network really started to develop that foundation and that confidence that I have today that I was able to build on top of. And going through that experience and seeing that miners have a cost of production, tying that into what in the gold market you call the all-in sustaining cost, and understanding these cost producer economics that play a big role in price discovery, really helped me understand Bitcoin as a digital gold. And then later, after Ethereum launched and participated in that as well as the early days of DeFi, I started understanding that when you can wrap Bitcoin and use it in decentralized finance contracts, that it creates a whole new financial marketplace. And I call it the internet economy. And it is literally the only economy in the world that is true free market. There is no one entity that can state the price of the money. And of course, the price of money is interest rates, right? So we all sit on the edge of our seat waiting for a small group of people to tell us what the price of money should be, when in fact it should be free market forces that are determining that price. And in the internet economy, in decentralized finance, it is the supply of money, the demand for loans, and the perception of counterparty risk that determines the price. And that element, compared to what we see in traditional finance, really piqued my interest. So understanding Bitcoin as basically just a speculative purchase in my portfolio, getting into mining and understanding it as digital gold, and then getting involved in digital finance and then understanding that, man, this is a pristine collateral. This is better than gold because you have 10-minute settlement times, you have no counterparty risk, and you're able to accomplish anything that you need to accomplish without trusting anybody else, and by only with your own permission. You don't have to go ask the banker for permission or ask an intermediary for permission. And the power of that, combined with the best attributes of what today we call cash equivalents, which would be easy transportation, fast centralized settlement, even though Bitcoin upgrades that centralized settlement from T+1, T+2, all the way to a 10-minute block time. That was my big epiphany. Bitcoin takes the best of gold as a collateral, and it takes the best of cash equivalents as a collateral. And now we have this new hybrid digital collateral, which I believe is by far the most pristine form of collateral in the world. And of course, taking that understanding and building it into my experiences that I had led to People's Reserve and building the financial tools that responsible savers of Bitcoin need to take advantage of their savings without giving up ownership or creating a taxable obligation.
Quick word from our sponsors. We spend a lot of time on this show talking about broken financial systems. As we all know very well, traditional healthcare is right up there with it. That's where CrowdHealth comes in. It's a peer-to-peer healthcare crowdfunding platform. Here's how it works. You pay a flat monthly membership fee, contribute a capped amount to another member's bill each month, And when something happens to you, the community funds your bill. For Bitcoiners already opting out of broken systems, CrowdHealth eliminates the middlemen, removes bureaucracy, and offers a community with aligned incentives. You can see any doctor you want, including the one you already have, and CrowdHealth can even negotiate your bill down, often 70 to 90% off, because you're paying cash price, not inflated insurance rates. Get started today for just $99 per month for your first 3 months by going to joincrowdhealth.com/proof. That's joincrowdhealth.com/proof. CrowdHealth is not insurance, just a better way to pay for your healthcare. That's a feature, not a bug. Take back your power and learn more at joincrowdhealth.com/proof. This is how we win together. Hedge funds have had automated trading and sophisticated risk management tools for decades. You haven't until now. The tides are shifting. Building a trading bot is now easier than ever, but without built-in guardrails and automatic safety stops, you're risking more than you realize. Mangrove helps to ensure your strategy is rigorously tested before going live and even lets you simulate on real-time data with $0 at risk. The best part? The funds never leave your custody, ever. You're in control the entire way. That's Mangrove, the smarter, safer way to automate your trading. Go to Mangrove.ai to access their developer tools now or join the waitlist for the full platform today. Early adopters receive 2 months for free. A lot of folks are interested, in Bitcoin's price. So I was wondering if you could double click on how you talked about your experience in Bitcoin mining, how that sort of shaped how you view Bitcoin's future price trajectory today. What are the technicals of Bitcoin mining that give you insight into Bitcoin's future price?
Yeah, the biggest thing for me is that there's a floor price and we call it the cost of production. And this is just basic economics. And I think a lot of people who would argue against me would say, no, CJ, what you're describing is the labor theory of value. And just because someone puts labor into a good or a service doesn't make it valuable. And that is true, right? If you dig a hole and it costs you $100 to dig the hole, it doesn't mean the hole's worth $100. So there needs to be a base layer of demand. There needs to be a value proposition to the good or service that the overall marketplace desires in order for this to apply. So with that framework and that mindset, you can look at the cost of production of any good or service. Like let's say you're a car maker and right now it costs you $20,000 to get the car put together onto the sales floor and ready to sell to the customer. Well, obviously, you cannot sell the car for less than $20,000 because then you'd be a bad businessman, right? You're gonna lose money. So you need to find a way to sell the good or service above the cost of production, or in the metals market, what they call the all-in sustaining cost. And for Bitcoin, it's no different. The cost of production is the cost to earning the block subsidy. And if you're a miner, you need to be able to sell your Coinbase reward for greater than it cost you to earn it. And that basic understanding really, I believe, gives me a really good insight into understanding when to kind of raise cash through the cycle, and then when to deploy that cash and to mine Bitcoin with that cash during the depressed times of the cycle when the price is trading to a discount to its cost of production, because other times it trades at a premium. And that's the cost of production cycle. You have a fair value, which is the cost of production, and it can trade at a discount and it can trade at a premium. And depending on where you are in that cycle, it should really determine whether you're accumulating Bitcoin or whether you're accumulating dollars so that you can deploy those in the future to accumulate more Bitcoin. And with that idea and with that strategy, it starts to make a lot of sense when you look at Bitcoin price discovery and you say, how can Bitcoin be at 126 and fall all the way back to 60,000? How is that possible? But when you understand that miners are paying somewhere between 60 and 75,000 to mine a Bitcoin, depending on your electrical costs and your other land, labor, and material costs, it makes a lot of sense. And if you go back to the previous cycle and you look at the China mining ban, we were at like 60,000 and China banned mining. All the miners, what did they have to do? They had to sell their treasury to relocate. And what did they do? They sold Bitcoin down to the cost of production. And as soon as it got down to that level, the selling stopped. And the miners relocated. And as soon as the hash rate started picking back up again from the relocations, price shot right back up to all-time highs again. So the producer consumer economics based on price discovery using the cost of production and the premium and discount model, I think is one of the best ways to understand where we are in the cycle and if at that time you should be accumulating Bitcoin or accumulating dollars in order to accumulate more Bitcoin in the future when it's in that discount zone.
Okay, that's very interesting. So you're not in the camp of, always be buying Bitcoin, always be dollar cost averaging.
Yeah, I mean, I think that it does make sense to always be buying Bitcoin if you don't understand this dynamic. If you're interested in this dynamic, I created a Bitcoin fair value algorithm. It's a plugin on TradingView to help you understand where the price is relative to what I call that fair value. And it's a tool. So, I mean, if you don't want to understand these things and you don't really care and you have other things going on in your life, always be buying, always be dollar cost averaging. In the long run, with a long term mindset, you're not going to lose when you're accumulating sats. But in the short term, if you're a business or you're a miner and you have to understand, $126,000 Bitcoin is almost a 100% premium when the cost of production is $65,000. So you have to understand that premium, these miners, especially now in the old days, the OGs, they had no fiduciary responsibility. But the biggest miners right now are publicly traded companies. They have a fiduciary responsibility to lock in profit so that they can move into AI, so that they can optimize the business, so that they can do these things and create value for their shareholders. So when those profit margins get up to a certain point, you're going to see sell pressure in the market. And that's a good thing, right? Because when this is the dynamic I love, Charles. When you get a premium to cost of production, that means that the marketplace is seeing value in the good or service. The value proposition is allowing people to pay more than the cost of production. That is how the free market price signal works. That is why capitalism is better than socialism and communism. Because in socialism and communism, you have stated prices. You have the state, or you have an authority trying to regulate the production and consumption of certain goods and services based on pricing controls. In the free market capitalism, when you see demand outpacing supply, the price goes up. When the price goes up, but the cost of production stays the same, the profit margin grows. When the profit margin grows, the producer can reinvest those profits to, guess what? Expand supply. And if they're expanding supply, there's something called the marginal cost of production. And that's just a fancy way of saying, hey, if I make 100,000 water bottles, it might cost me 10 cents per water bottle. But if I make 1,000,000 water bottles, it might only cost me 8 cents per water bottle. So you lower your marginal cost of production, you increase the supply, you lower your front end price because lower prices means more demand. Now you're selling 1,000,000 water bottles at an 8 cents cost instead of 100,000 water bottles at a 10 cents cost. And even though the front end price in the store went down a little bit, because your cost of production went down because of the reduction in your marginal cost of production, you're actually making more money because you're selling 10 times the amount of units. This is how the free market allows people to vote with their dollars so that supply can be expanded to meet demand, continually creating profitability so that resources are allocated properly. When you take away that pricing mechanism, when you take away free market pricing, you end up with a lot of what we see today where there's a lot of confusion and a lot of the valuation metrics don't make a lot of sense because there's a lot of price controls. Things are too big to fail. And when things are too big to fail, you start to stray away from free market. And that's the core, the crux of a lot of the problems we face today.
You also started to highlight, Bitcoin's volatility, touching on how it's recently fallen from a peak of 120K to roughly 60, 70K. You also mentioned in the early days you watched it run up to 1,000. Can you hit on 2 points here? What was your entry price then? And how did riding that roller coaster help you ultimately view Bitcoin as a digital savings technology rather than an investment? I think many people still today view Bitcoin as a speculative asset or investment.
Yeah, so I first started buying just over $100, somewhere between 100 and $150 is when I really just started buying it, but without the conviction I have today, just trying to establish a position. And then I watched that position, go 10x. I think the peak was around $1,200, and I was like, "Well, this is great." This was a small portion of my portfolio, and I just 10x'd it, so now it's one of the biggest positions in my portfolio. And then a little bit later, back down to nothing. So I didn't really understand it back then based on that price action. I thought like is it a scam? Like I had to do more research because of that price action. And when I started getting into mining and having a better understanding of how the protocol actually works, then I started building conviction and understanding what Bitcoin really is. And why is it a savings technology? And I think this is one of the most interesting things in the world that isn't talked about right now. To me, the the protocol, the Bitcoin protocol, specifically the halving in combination with the difficulty adjustment, that system is like the central bank for Bitcoin because it's a regulatory system, right? Its job is to target 10-minute block times. And if you see hash rate growing and blocks being found at an average less than 10-minute times, the difficulty increases. Well, when difficulty increases, something weird happens. The cost of production increases. So now the value proposition, the miner who's selling has to say, hey, you need to give me more money. This is costing me more. Therefore, I need to charge you a higher price. And what that really means is Bitcoin is the only commodity in the world. It's the only anything in the world that has the ability to raise or lower its own cost of production. It does it by itself, right? We pull gold out of the ground, and if it gets harder to find, then the cost could go up. But it doesn't say it wants to get harder to find, right? Like the price of gold has been doing really well over the last year and has and breached over $5,000 an ounce. Well, when it went over $5,000 an ounce, they start pulling more gold out of the ground. But at no point in time does gold have the ability to say, I am now going to make myself harder to find. Bitcoin does have the ability to say, I am going to make myself harder to find. Or if the hash rate is shrinking and the network is struggling, it can sustain the network by saying, I'm going to make myself easier to find, which increases the profitability of miners and incentivizes the increase in hash rate and the growth in the network. So Bitcoin is really the only asset in the world that has the ability to raise or lower its cost of production, which means it is an engineered money. It was strategically designed to leverage the natural laws of economics to be a savings technology, to empower its holders and its savers in a way that no other money or asset in the world has the ability to do.
Can you double click on that a little bit and talk about why Bitcoin being engineered money is actually an advantage?
Yeah, absolutely. And the reason is because we don't have to depend on a centralized entity to price the money. So if Bitcoin is doing really well and the hash rate is growing significantly, the cost of production will increase. And then what it does is it kind of that price discovery, that free market price discovery cycle I was talking about, this is how you discover what something is worth. Right? So if you're selling a car at $20,000 and you're very easily selling those cars at 30 and 40 and $50,000, that is the free market telling you, man, this is a great car because I'm willing to pay so much more than it costs to produce the car because it's delivering some kind of great value to you. And what that means is that the producers, they can get with that profit, they can capture that profit and reinvest it into the supply and reinvest it into the quality of the product. And that's exactly what we see happening with Bitcoin. Bitcoin has had hundreds of bips, many changes over the last decade. So it's constantly evolving and it's constantly shifting. It's constantly becoming better. And it becomes better because it produces profit for those who participate in the network, whether you're a miner, an investor, a holder, or even a speculator. There's value creation from the network itself. And then we've had experimental money in the form of fiat, right? Fiat started as the liability that was backed by the gold asset. So you think of it in balance sheet terms. You have the gold as the asset. You issue a paper liability so that the gold's monetary velocity can increase because the paper can trade hands much easier and faster than gold can trade hands. So fiat currency was originally a technology built on top of gold. But Bitcoin comes and says, yeah, not only do we want to make it easy and simple to move the money back and forth between each other so that the velocity can increase to an infinite capacity, but at the same time, we want to upgrade the characteristics of the money. We want absolute digital scarcity. We don't just want the hardness of gold. We don't want the high cost of pulling the gold out of the ground because even at that, you're at a 1-2% inflation rate per year. So the high cost doesn't stop from pulling the gold out of the ground. And every once in a while, you see an article about how there's gold asteroids floating around. Well, if any of those gold asteroids get too close, you think Elon Musk is going to go to Mars, or is he going to go to the gold asteroid? He'll bring the gold asteroid down before he goes to Mars, because he'll use the gold asteroid to pay to occupy Mars. So it's all about economic incentive. And when you engineer something, it is almost always better than the natural version of something. And what we did with gold, putting up a paper technology, let's call it a fax machine. We knew the email was coming, but in the interim, we had a fax machine. That's what fiat is. We had gold, we had natural money. We created a fax machine with fiat, but ultimately, we knew that the internet and digital assets and the ability to solve the Byzantine general problem, the double spend problem, being able to guarantee 21 million units of a digital commodity without it being duplicated, without it being defrauded, without the ability to double spend that commodity. That is the breakthrough. And leveraging those breakthroughs in engineered money has second and third order effects that are almost indescribable, but they go down to the spiritual level, they go down to economic incentive level, which means they go down to the behavioral level of people. And when the foundation of society is built on top of broken money, you see that the world that we have today and how it's falling apart. We believe, Bitcoiners, that when you build society on top of a strong, sound money foundation, especially a pristine collateral foundation, then all the financial products on top of it, not just the spending and savings technology, but the financial technologies built on top of that pristine collateral layer, make for a better world that empower we the people, rather than the systems we see today that don't empower, but rather extract value from people.
You hinted at some of the storms that Bitcoin has had to weather, throughout its history due to various changes from the inception of Bitcoin. When you look back at Bitcoin's early days, there were so many points where it could have failed. You had regulatory crackdowns, technical difficulties, or vulnerabilities rather, and potential loss of public trust. The list goes on. So, what do you think enabled it to survive almost 2 decades now and actually be the best performing asset in human history?
I think it's its ability to adapt. If you go back and look at all the Bitcoin improvement proposals and how many times the core code has actually been upgraded, I mean, look at the banking system. When is the banking system ever upgraded? How long does it take for that to go into effect? They basically have a monopoly on what's happening. So the advantage of Bitcoin was the ability for it to change and adapt rapidly, even if that change was for the worse. So you think back to, I think of all the different forks. Those were great times, by the way, when Bitcoin was forking this way, forking that way, because you're getting all these coins and you can just sell them into the market to the people who believed in that version of Bitcoin. Bitcoin Cash, I think, being the most prevalent fork or the most valuable fork that was gifted to Bitcoiners. But the fact that Bitcoin Cash was able to do what it did and fail is a power of Bitcoin. Because one thing that we learn through life is that most of the time, your biggest successes are going to be built on top of failures. They're not going to be built on top of those lucky moments that you have in your life that people call luck or coincidence. Most of the time, like my building with People's Reserve, as you well know, I bought my first house for 100 Bitcoin. Well, I can tell you today, when I go home to my property and I walk into my $7 million home, it is not a $7 million home. It's not even worth $500,000. And in today's real estate market, I have to fire sale it for probably $400,000 just to get the liquid money for it. So, I'm walking into $500,000 in a good market house. It's worth $7 million. It was that failure that led to the creation of People's Reserve and the creation of our Bitcoin powered mortgage contracts. So in real life, when Bitcoin forked and failed and forked and failed and forked and failed, this is just another way of, in business, what we call saying iterate, right? Don't try to make things perfect. Get it so that it works. Get it so that it delivers value to the customer. Get customer feedback and iterate and iterate and iterate and make it better, make it better, make it better. And sometimes some of those changes are for the worse and you have to change back. So sometimes you have a Bitcoin Cash fork and you realize, you know what? Big blocks don't make sense. If we want to wrap Bitcoin and use it in a smart contract, we can already do that. We don't need to do both things on the same chain. We need security. We need decentralization. We need to make sure that it's very easy and cost effective to run a node so that the network can stay decentralized. So you start to learn what trade-offs come with small blocks versus big blocks, fast speeds versus slow speeds, 10-minute block times versus 10-second block times. And if you can't iterate and you can't learn why one way is better than the other way, well, then you stagnate and you die. So Bitcoin is able to rapidly evolve, rapidly transition, rapidly iterate. And every time it makes a change, it becomes stronger and stronger and stronger because the community itself becomes smarter and smarter and smarter. When the rest of the world is still worried about, the new design on the next $100 bill, whether it's going to have Ben Franklin or some new person, who cares? The money is broken. We are fixing the money in live time. We are iterating in live time, and there is no other system that is doing that at the rate and pace of Bitcoin.
Okay, and CJ, one term that comes up a lot in the Bitcoin space, but isn't widely understood, but related to a lot of the ideas you're presenting here, is the monetization of Bitcoin. Can you break down what that actually means and how it's playing out in real time today?
Yeah, absolutely. And I think, everybody pretty much understands Bitcoin as like a spending or a savings technology. They know that if you have Bitcoin, then you can spend it. And it's a pretty good idea to save Bitcoin because when you look at its performance over the last decade, it's been the best performing asset in the world. Even though we've pulled back, right? We're down 50% almost from the peak, and it's still been the best performing asset in the world over the last decade. So it's a spending technology, it's a savings technology, but what does that mean for the future of Bitcoin? What does that mean when it starts to get monetized and people start to adopt it and use it on a wide scale? To me, what that means is it's the financialization. It's the ability to use Bitcoin as a collateral to use financial tools. And I think that's the next big move for Bitcoin. Bitcoin is very, to me, Bitcoin is a savings technology, right? I learned the hard way that you don't want to buy something with your Bitcoin, especially at the bottom of the S curve, because as demand grows on a finite supply asset, that price discovery process is going to need time to get to the top of the S curve. And when we get to the top of the S curve, I think, Bitcoin will be much more stable in price and it will be more tied directly to global GDP. And as GDP increases and value creation increases, then the price of Bitcoin will go up, probably matching somewhere around global GDP and vice versa. If there's a pullback or a recession, the price can come down relative to global GDP. But right now, in the very beginning of this adoption phase, where we are, we're not even that laggards phase right now. It's still the early adopters. Most people think of this as a joke. The financial system is just now starting to recognize it as a monetary asset instead of as a speculative digital cryptocurrency. So we're so early in this that I think what people don't understand in the marketplace right now is that what's more important than savings technology and spending technology is actually financial technology, because financial technology is really what allows you to leverage your time, because time is money. And if you want to buy a house, what are you going to do? Work 30 years to save up for the house and then buy it? Or are you going to be able to get financing and buy the house and then work 30 years to pay off the house so that you get the house today, so that your family has a roof over their head today, so that you can experience life and growth and safety in that property today rather than 30 years from now? That's a really good value add, right? But the difference is, why do you trade your time and energy? Why do you back your time and energy for that financing when you could be using a savings vehicle like Bitcoin that increases your purchasing power? In other words, adds time to your bank account. For those listeners, maybe you should watch that movie In Time, that movie with Justin Timberlake. It's where they have like the numbers in their arm. It's a very good, gives you a very good idea of how important time is relative to money. And for them, when they ran out of time, they die. And then there were people in the system that had infinite amounts of time. And then there were people in the system that were poor that had very little amounts of time. And when you don't invest your time the right way, you end up like those poor people where you don't get to experience the great things in life, or you have to wait to experience those things. But if you have plenty of time, and if you have a portfolio that's working for you, then you can experience a plethora of things and you can have a higher quality of life and standard of living. And that's what Bitcoin does as a financial technology. When you use it as a collateral, the Bitcoin does the hard work, right? If you go to the bank and you make a promise to pay, you borrow $500,000 to buy a house and you promise to pay it back. you have to trade $500,000 of your time and labor to pay it back, plus interest. So you're probably going to pay back over $1 million for that house that you thought you paid $500,000 for. But if you were to use a savings vehicle like Bitcoin, that again is engineered and strategically designed to increase in purchasing power over time, as the value of that collateral grows over time, right? Because think about your promise to the bank. I promise to go work. The value doesn't grow. The growth in your wages is not going to keep up with the interest rate that you're paying. But the growth in your Bitcoin collateral will outpace the interest that you're paying. So the burden of the debt will actually shrink over time. That is the real power of savings technology. That is the real, you leverage savings technology with financial tools built around the idea of an engineered money that gains value over time. And you can leverage that value growth to reduce the burden of debt in your real life so that the amount of time and energy that you need to put in to service that debt to become debt free is automatically reduced by the growth in your collateral. And that, I believe, is going to lead to the next wave of adoption. Once that light bulb goes off, people will understand, oh, I don't save dollars for a down payment to buy a house to make a promise and get financing. Instead, I just save Bitcoin, post the Bitcoin as collateral, continue doing what I'm doing, but allow that growth in collateral value to reduce the burden of the debt so that I could be debt free in 9 years or 15 years instead of being stuck in a 30-year debt obligation that, it's become known as debt slavery at this point.
Mm. Well, let's get more into the weeds of this. I know you've been itching to talk about People's Reserve. Can you tell us about the company you founded? What problem are you solving? Who's your target customer? And what progress have you made so far?
Yeah, so the target customer is Bitcoiners, responsible savers of Bitcoin. And the problem that we've solved is that you shouldn't have to give up your Bitcoin because it is a pristine collateral, it is an engineered money, right? If Elon Musk can borrow against his Tesla shares to buy Twitter and call it X, then why can't we borrow against our Bitcoin? And why do we have to borrow against our Bitcoin at 12% and 13% or more when everybody can borrow against their securities, which have way overinflated values, at 4 and 5% or SOFR plus 100 basis points? What Where's the disconnect there? So there's a problem. The problem is that, yeah, you can borrow against your Bitcoin, but you're going to be paying higher interest rates when in reality you're posting a more pristine collateral than what other people post when they post their securities, and they're paying a lower interest rate. So that just doesn't make sense right off the bat. The second thing is that there's liquidation risk, right? When you borrow against stock or Bitcoin on margin, especially because Bitcoin is very volatile, if the price of Bitcoin drops too far, you can lose everything. So you can lose your entire savings. And that would be a horrible situation. For me, I had that choice in 2019 when I bought my house. I could sell 100 Bitcoin and buy my house, or I could take 200 Bitcoin and borrow against it with a healthy 50% LTV. 6 months later, COVID hit. And during COVID, it was ridiculous. Nobody could sign into anything. You couldn't sign into BitMEX. You couldn't sign into any of the, you could not get anywhere or do anything. So I would have been liquidated. So my $7 million house would have been a $14 million house. And it would have been, I'd be dead on the inside, but alive on the outside because I would have paid $14 million. So you should not have to buy your house and not be able to sleep at night and then be stuck babysitting charts and learning macro just to understand if your lifetime savings are going to disappear or not because something happened in the world and Bitcoin's price temporarily went down, even though it's designed to continuously go up over time through the price discovery process. So the problem that we solve is Bitcoiners are being responsible savers of Bitcoin, but they want to unlock the purchasing power of their savings without giving up ownership and without triggering a taxable event. Because if you sell it, you're going to have to pay capital gains tax. So now anything that you're trying to buy, if you're paying long-term capital gains tax, is going to be roughly 20% more of a cost for you because you have to pay tax. And if it's short-term, it's even higher, to be upwards of 40% tax on that. So Bitcoiners, they want to take advantage of the purchasing power that they have, but they know where Bitcoin is going and they don't want to give it up. Or at least they learn from others like me who made the mistake of buying the home and watching the value of the house crash in terms of Bitcoin. And what we do is we create financial tools that allow them to do exactly that. Unlock the purchasing power of your Bitcoin not trigger a taxable event, and then leverage the engineered money design of Bitcoin to lower your interest rate or to eliminate the debt burden altogether over the life of the loan.
And how does People's Reserve get its capital to actually lend out? And what kind of investors willing to participate? And how have you been able to scale that?
Yeah, great question. So we have a partnership with TrueFi. So you can learn more about TrueFi at truefi.fund. They're the exclusive liquidity provider for People's Reserve's mortgage products. And what TrueFi does is they actually purchase the home cash and then they seller finance the home to the People's Reserve customer. So it's a seller financing contract. They're not technically a lender. They're a real estate investment group, and they seller finance the properties back to the Bitcoin buyers who can post Bitcoin as collateral. And then what happens from this point becomes really interesting because in the United States, they have what are called mortgage backed securities. And mortgage backed securities are simply a whole bunch of different mortgages with different risk metrics, LTVs, packaged into one product and then sold as a cash flow product into the fixed income market. And this was the problem in 2006 and 2007 leading up to 2008 was that the banks were able to just write an infinite amount of loans and package them together and then sell them off to private credit and capture what they call the net present value of the future cash flows of that product. So if you have a product that's paying cash flow over a 30-year period, you can sell that product today at the net present value. And it's a very profitable business model, and the banks made a fortune. But in order to continue packaging loans together, they kept writing more and more risky loans. But what TrueFi does is they don't write subprime risky loans. They write above prime loans that are no risk because we have Bitcoin collateralization component. It's not just a promise based on somebody going to work for the next 30 years. It's the additional Bitcoin collateral component. So you have property title plus pristine collateral, which means lower risk, which means lower costs of capital for the borrower. And then ultimately, they package these loans together. So they'll take a self-repaying mortgage, which is our mortgage for our fully collateralized borrower. In other words, if you're buying a $500,000 home, you have the ability to post $500,000 of Bitcoin. We also have what we call the Bitcoin mortgage, which only requires a 20% down payment. So if you're buying that same $500,000 home, you only have to put down $100,000 of Bitcoin. The difference is with the self-repaying mortgage, when you put down the full 500,000, you keep all of the collateral. The collateral is yours. So at the end of the loan, all of that Bitcoin collateral, regardless of what it's worth, and you can, if Bitcoin goes up through a bull market, you can remove that collateral. You only have to maintain that 100% LTV threshold. But at the end of it, you get everything back. So as a $100 million fund, we are able to do $50 million of loans per quarter, sell the CSMO at the end of the quarter, replenish the 50 million that went into those loans. In the meantime, the other 50 million is writing next quarter's loans. And then on top of it, we have the profit, which gets distributed to our LPs. So our LPs are very happy that they're able to participate in a low risk, medium reward cash flow generation opportunity in the form of the CSMO. But profitability is created by the issuance of the CSMO and the sale of the CSMO as a fixed income product into the private credit marketplace. And, private credit is a little bit worried right now. BlackRock is getting duped by fake collateral. JP Morgan, Blue Owl, some of the biggest private credit firms in the world are gating and blocking withdrawals because money was very loose and they were lending that money out. And it was to the point where even BlackRock was fooled by a fake collateral. There was some guy who created accounts receivables from different companies around the world. He posted that as a collateral and got financed by BlackRock. They later found out that those accounts receivables were actually fake. They were fraudulent and the collateral was worthless and everything went belly up and it was marked down from 100 cents on the dollar to zero overnight. But with the collateralized sound money obligation, you have 24/7, 365 auditability and transparency. You're able to see and track the LTV of each loan anytime you want through the dashboard. So it's interesting that Bitcoin is actually fixing private credit. We don't think of it as anything beyond the money, but when you combine that money with financial technology, we are solving problems in many different marketplaces, not just the world of money, but in the world of finance and private credit, having better, lower risk, medium reward cash flow products with complete auditability and transparency 24/7, 365. This is the future that all investors want to see because they don't really want to have to call their fund manager and say, what do I really own? Is this going to be worth zero tomorrow? And being able to mark these things to market. In other words, being able to give a live price for this instrument at that specific time in the marketplace is something that you don't see in private credit. Very few things are marked to market. Even the bank's bond assets are not marked to market. They're marked to maturation, which helps mask some of the losses that they have. So the dynamic of Bitcoin being integrated into the financial system, what we call Bitcoin powered finance. Of course, MicroStrategy has what they call digital credit. It's finance fully backed by Bitcoin. But Bitcoin powered finance, and I've talked about this with Michael before. It was a great conversation we had in DC. Bitcoin powered finance is different than digital credit because it's the fusion of Bitcoin with traditional financial products. What Michael has done is he's opened the Pandora's box of digital credit, which is a brand new concept that hasn't been done before. But what we do is we build on top of his shoulders with Bitcoin powered finance, which fuses Bitcoin into traditional products like a mortgage or a loan or an insurance.
Very interesting. And CJ, to close out here, let's discuss Bitcoin's future in terms of price and policy. You've said Bitcoin isn't far from a repricing event. What do you think would actually trigger that, and how high do you think the price could eventually go?
Yeah, and that's a great question. I think the next trigger is very obvious. And what it's going to be the lowering of interest rates and the printing of money. And that's just because we are stuck in a fiscal dominance era right now. There is no way out of this. The US government has to continue to dilute the dollar. They have to continue to print the dollar. If they stopped printing the dollar, the value of the dollar relative to other fiat currencies known as the DXY would go up quite a bit. And then if it went up too high, uh, other participants in the marketplace would actually have to sell their treasuries in order to raise dollars so that they could service their debts. And then that pushes interest rates up, which then creates more of a liability for future borrowing. And that's the problem. It's the deficit spending. It's the guarantee that the U.S. government has to borrow money in order to pay everything for the budget that they passed. And because we're in it, we're stuck in this area where you can't even cut government. Like if you just shut down the entire government, you just said 100% of the government is shut down. It doesn't matter because between military and Social Security and Medicare, Medicaid, you are not going to be, we don't collect enough money in taxes. So just those couple of things, those promises that politicians have made to people in the past has created such a large obligation on the US government that they always, every single year, have to borrow more money than they collect in taxes. And that deficit is being paid for by creating new dollars that have an interest rate attached to them. And the higher that interest rate is, you can see this now in the interest expense. If you go to the CBO's website and you look at the projections for interest expense, it's gone from being not even in the top 10 to, I believe right now, being the number 3 most expensive line item in the US budget. So the interest expense and what's happening with interest rates, what we call fiscal dominance, this is the biggest problem that is only going to accelerate when rates go lower. And the reason it'll accelerate when rates go lower is the same reason that things decelerated when rates went higher. When rates went higher, people pulled their money out of investments. They didn't want to be investors. They wanted to be savers. Why? Because they could earn 5% in a money market fund. So why would I take the risk of earning 6% in the stock market when the stock market could go to zero? Not all of it, but if you invest in an individual stock, it can go to zero. So you can lose your principal. But if you lend your money to the government, you can't lose your principal. They're always going to print that money and give it to you. What you can buy with it, who knows? But they're always going to print it to you and give it to you. You can't lose it like you could in an investment. So those higher interest rates incentivize people to not be investors and instead be savers. So we saw funds flow from investment to savings. Now the opposite is going to happen. When interest rates come back down and the Federal Reserve states rates lower, which is going to happen pretty soon, by the way, the new guy gets in there in May. And probably that first meeting, in my opinion, he will not lower rates in the first meeting because they want to establish that hawkish narrative. But in the following meetings, I believe the rates will start to come down. And when the rates get low enough, I think when the rates go back below 3%, call it, or maybe even 2.5%, somewhere in that range, 2.5%, 3%, I think is the magic spot. But surely when you get below 2.5%, a lot of those savers who left the investment world and went into the money market savings world are going to flee from the money market funds. And there's around just over $7 trillion in money markets right now. So I think, over 50%, probably closer to 65%, maybe 70% of that $7 trillion plus dollars will come out of money market funds and it will go back into investments. It will go back into stocks. It will go back into gold and silver and Bitcoin and risk on assets because those savers will no longer be properly incentivized to save. Instead, they will be incentivized to invest. And that's the big switch that is going to happen when interest rates go lower. And we know interest rates are going to go lower because Trump is calling for it. His administration is calling for it. The guy who is taking over, Warsh, the guy who's taking over for Powell, he has a theory on AI, how AI is deflationary and actually allows for interest rates to come down lower. So every core critical component and thinker that goes into establishing what that rate is going to be is really calling for lower interest rates. And when that comes to fruition and we see rates go below that 2.5% mark on the front end of the curve, a lot of that trillions of dollars will come out of money market funds and come back into investable assets, which right now Bitcoin is one of those kind of risk on assets. I don't agree with that classification, but the market can be wrong longer than we can be solvent, right? So we have to understand what the market thinks and how to position ourselves. And when it happens, Bitcoin is going to rip, and it's going to rip like it never did before. And I believe $1 million Bitcoin is on the table. I think the next stop is that Bitcoin will be worth the price of a single family home. We'll consolidate there for a little bit. Maybe we have another bear market, but the following bull market, or maybe we don't even need a rest from that point, Bitcoin goes to $1 million.
Okay, we'll see. Want to shift over to policy. We got the strategic national Bitcoin reserve, but no new Bitcoin has actually been purchased by the federal government. Do you view the strategic reserve as a failed effort thus far, or what do you think its potential is and impact on Bitcoin and Bitcoin's pricing going forward?
Yeah, I don't think it's a failure. I think people, we grow up, we have like a microwave generation where everybody wants to see something happen immediately. And one thing that Bitcoin teaches you is to have like a long-term mindset and to be very patient. So leaning on that understanding, I think, it's not a failure. Has there been as much attention to it as I'd like there to be? No. Has there been as much innovation as there could be? No. Um, but the fact that it's being talked about, the fact that legislation is being written, like clarity and other things, this is just part of the process. It's part of people understanding what's going on. So ultimately, when I first started in Bitcoin, if you told me that the president of the United States was going to be a Bitcoiner, I would have laughed in your face. But here we are today, not too long after I started, and the president of the United States and his family is a Bitcoiner. And a lot of people in the administration are a Bitcoiner. And a lot of people in the government aren't laughing at Bitcoin and calling it a scam anymore. They're writing legislation around it. So I think we've made tremendous progress. But I do believe that we really need to get some minds in there. Back when Trump appointed RFK, he had this voting thing that went on, and the community, thank you to everybody who voted for me. I think I finished like in 8th place out of thousands of people to be on his economic council. I was never contacted by him, but I had a plan. And the plan was, look, if you're going to have a strategic Bitcoin reserve, you have to integrate your Bitcoin strategy into your monetary, fiscal, and economic policies. And one of the best ways to do that would be to collect tariffs in Bitcoin, right? If a country was going to pay a tariff or a consumer was going to pay a tariff, offer them a discounted tariff if they were to make that payment in Bitcoin. And then the government would be bringing in Bitcoin and accumulating Bitcoin. Even if there was no official strategic Bitcoin reserve, at least we would be accumulating Bitcoin in other ways rather than just confiscation. We have to do something with the dollars that we are printing other than investing them into the economy. Because when we invest them into the economy, we are not getting back that full dollar's worth of return. Thus, our debt continues to grow, and thus our debt to GDP ratio continues to grow. And we need to properly invest those dollars so that our debt to GDP shrinks, not grows. And how do you do that? How do you print dollars and make them grow at a rate faster than they are now? Well, you can't continue to do what you're doing now. You need to find some type of asset that you can put that dollar into that is going to return greater than a dollar in the future. So it's okay to print dollars and support the economy, right? Everybody's doing it. So you have to do it or else you're going to fall behind. But it is not okay to ignore the engineered money, to ignore the one advantage we have over all of the other countries who want to see us fall and take us down because we have that reserve currency of the world, because we are in that privileged position where we can print money without a negative effect because of the global demand for dollar denominated debt and the euro within the euro dollar system. This is a very special dynamic. We have the ability to print dollars and buy Bitcoin and get greater than a dollar of return on that Bitcoin. And by putting Bitcoin on the balance sheet, what happens is we actually reduce risk. We grow equity value against our liabilities, which reduces risk. And that's what El Salvador has done. El Salvador has done this by fighting crime, but also by investing in Bitcoin and putting Bitcoin on their balance sheet. By having Bitcoin on their balance sheet and fighting crime and investing in their economy, El Salvador has some of the best performing traditional bonds in the world. What does that mean? It means lower interest rates. And lower interest rates means cheaper cost of capital. Cheaper cost of capital means ultimately you can borrow more money to reinvest in your economy to create GDP growth. That's what the United States needs right now. We don't need a group of men coming out and saying the interest rate is lower because we say so. No, we need the free market to say, wow, the United States balance sheet is looking strong, right? It's already strong now because we have hundreds of trillions of dollars of assets. But does anybody want to sell Alaska to Russia? Does that sound like a good idea? Do we want to raise cash by giving up Alaska? Do we want to raise cash by giving up what we have already? No, we want to raise cash by creating growth. We want to grow our way out of it. But the best way to grow your way out of it is to adopt an asset that has been strategically designed to create growth. So that is where my frustration lies. There are some, what if you just collected tariffs in Bitcoin and then you issued Bitcoin bonds? And every time somebody buys a US Treasury, there's a small portion of Bitcoin that backs that Treasury that is taken from the strategic Bitcoin reserve. So that way, when you're investing in a Treasury, you're getting outpaced. The country is borrowing at, call it 2% or even 1%. But because there's a little piece of Bitcoin attached to that for the lender, it's actually performing at 4 and 5%, right? So now you have the highest and best performing treasuries in the world. And it's because you attached Bitcoin to it, because you were collecting Bitcoin from your tariff collection. And that little bit of Bitcoin with that extra performance boost gives you, the country that can borrow at the cheapest rate, the best performing treasury in the world. That means you can attract capital. You can push interest rates lower. That is the magic of Bitcoin on a national level. Integrating Bitcoin into those monetary, fiscal, and economic strategies allow you to lower your cost of capital, which is exactly what we need right now, because it's lowering the cost of capital in a way that doesn't make those money market funds run for the exits, right? If we state the rate down to 2%, it runs for the exits, and we have a big inflationary wave because of demand pool inflation. But if you lower interest rates to 2%, but you integrate a Bitcoin component, and now the treasury is still paying 4% because Bitcoin performs over that time period, nobody leaves the money market fund. All that happens is now your interest rate burden starts to shrink again, but people stay investing and stay lending you money. These are the types of solutions that the system needs to understand. But when I look at the system and I see 75 plus year olds who are asked questions on television and can't even speak, they can't even, I don't want to name names, but I saw one politician who's been there a very long time. They asked him questions and he's just dozing off. These are geriatric, these people, a new generation needs to rise up. A new generation needs to take lead. A new generation needs to learn from all of the good things that we learned from the previous generations, but it needs to adapt, right? It's a famous saying, adapt or die. And right now we're refusing to adapt. And if we don't adapt, we will die. Bitcoin is the solution. Bitcoin is what we need to adopt in order to adapt. And if we're able to do that, we can stay in charge of the financial world for another 100 years. If we don't, I'm scared for the future of our children.
And what would undeniable success actually look like for the strategic reserve?
I think undeniable success would be a full on integration again into those monetary, financial, and economic policies. You have to have a way to issue Bitcoin bonds. And that doesn't mean you're raising money from people and then taking a portion of that money and buying Bitcoin. It means that you're able to attach Bitcoin to your treasury sale through other means. And what are those means? Again, collect tariffs in Bitcoin, collect taxes in Bitcoin and give a discount. Find interesting ways that you can accumulate Bitcoin so that you can tie it into your system and use that Bitcoin to optimize performance and returns for those who are investing into your system. The United States has had the success that it's had because it is the most investable country in the world. Now, you look around the world, you look at Dubai, you look in Thailand, you look in Singapore, you look in Hong Kong. Why have they succeeded? Because they made themselves investable. That's why. We need to make ourselves investable again. And when an investor is looking where to go with their capital, they are not looking to go into a marketplace that is continuously being diluted. They're looking for value generation and value creation. This is the alpha. We must reattach ourselves to alpha. We must pursue value generation and creation rather than just printing. And then that will attract the capital back from around the world who can't compete with a true free market that we can actually have here in the United States that other states can't have because of their form of government or type of government. We are primed for this upgrade, and we are the best to be able to adopt and move forward and actually show what it means to adopt Bitcoin. But right now, we're taking notes from El Salvador, a country whose GDP is a rounding error compared to us, but we should be taking notes from them. It's time for us to step up and take the lead. And when we are leading in the industry, that is what I would determine is our success.
All right, CJ, I think as we've all learned, you're very opinionated. Any last words you'd like to leave the people with?
Yeah, I just want to say thanks again for having me. It was great to come on the show. And didn't get to dive too deep into People's Reserve with our Bitcoin mortgages and our Bitcoin bonds, but you can go to peoplesreserve.com. We have some really fun calculators. If you like Zillow, you're going to love our calculators. They're very addicting. It's fun to play around with them and see how you can leverage savings technology to increase your quality of life and standard of living. So check us out at peoplesreserve.com. Play around on the calculators. Give me a follow on X at CJ Konstantinos, and of course, People's Reserve at People's Reserve. And if you have any questions, feel free to contact us. We have a team. We'll be able to help you out in any way that we can.
All right. Awesome, CJ. Thanks again for coming on the show. Appreciated your insights today and hearing more about your background, getting to learn a little bit more about your view on everything that's happening in Bitcoin and its future. So thanks again.
Thank you.